I'm Bob Hutchinson. Welcome to the DollarCentShow.com, making sense of every dollar. If you do not understand financial matters, you are in the right place. If you don't understand interest rates, you are in the right place. If you don't understand inflation, you don't understand monetary policy from fiscal policy, you are in the right place. If you don't know how to buy or sell a house and understand what goes into it, you are in the right place. Now, if you haven't studied economics, finance, accounting, business administration, things of that kind, which are typically done at the college or university level, then the chances are excellent that you are financially illiterate. And it's not really your fault because these are subjects that really most people never do study. And so, probably over 90% of the people in this country are financially illiterate. Therefore, if you are a doctor, a lawyer, a mechanic, a carpenter, a teacher, a nurse, chances are very good that you are financially illiterate. So, if that's the case, you've come to the right place. If you want to gain an understanding of these things. Now, just a reminder that we are not giving advice. We're not financial advisors. We're not investment advisors. We're not giving financial advice. We're not giving legal advice. For that matter, we're not giving any sort of professional advice. And likewise, there are no express or implied warranties of fitness for particular purpose or accuracy regarding any of the information given here. So the whole idea is to present this material to you for no charge, for free, so that if you don't have the time or the money to pursue these subjects or at the college or university level, the idea here is to give you some of that knowledge. And in addition, I've been involved in, as you'll come to learn in the following segments, in areas that are very relevant. And so I plan on giving you a lot of real life examples from my experience which I want to put to work for you so that you can combine that with the other sort of textbook forms of knowledge we'll be presenting and to try to strengthen your financial hand as much as possible. Yeah, the whole idea is to help give you the financial tools so that you can be successful, so that you can have a financial future, so that you can make sense of all of these things and have a full and rich life. So that's going to do it for now. Look forward to having you join us in the episodes to come. Welcome back for another edition of the DollarCentShow.com. In our last segment, we were talking about the difference between an arm's length transaction versus a trust relationship, or what the law would call a fiduciary duty relationship. And I want to give you a real life story in that regard. As you remember, in our last segment, we talked about being skeptical, getting the facts, doing your homework, doing what is called due diligence. In other words, not just blind, giving the other side to any possible transaction your blind trust. As indicated, I did a lot of, I practiced law for several decades. And one of the areas that I spent a lot of time on for, more than a dozen years was in the area called securities law, which has to do with stocks, bonds, investment instruments, investments, things of that kind. And so one day I got a call from a woman who was the wife of a professor at a very prominent university in the Northeast United States. And she said that one day her husband got a phone call, and this guy on the other end of the line said, "Oh, we've got this great investment opportunity for you." And he explained what it was. And the guy said, "Well, gee, that sounds pretty good." And he said, "I want to talk to my wife about it." And the guy said, "What? You want to talk to your wife about it? Don't you wear the pants in this family? You don't need to talk to your wife about it. This is a great deal. It's going to make you a lot of money. And so it went. So this guy, this professor, forked over $750,000 to this outfit. And it was basically a total scam. These characters essentially took the money and ran. Now, here's a guy. He probably was a PhD, and I've not specifically mentioned this in other segments, but I would like to mention it now, and that is that no matter what your level of education is, and this includes doctors, lawyers, dentists, professors, that you owe it to yourself to gain financial literacy. And you also owe it to yourself to use common sense. You owe it to yourself to act in a cautious manner, to understand risk. And we're going to be talking about risk in future segments. But what you don't want to do is blindly rush into some investment without knowing all the facts. And remember, I was talking about the football analogy. Who are the players? Who are the teams? Who's in the league? And this professor did everything wrong. He did not talk to his wife, and apparently he didn't talk to anybody. I mean, and if he himself didn't know anything about financial matters, which clearly he didn't, I mean, what you don't do is lose all of your money. And according to her, that was essentially all the money they had saved, and put it into one thing like that. And so, I mean, you get the idea. And I think what this does is it reinforces this idea of the importance of financial literacy. Now, these people, they were, I think, in their 60s. I mean, so they, at that age and in that kind of an occupation, once you lose all your money like that, essentially, you're never going to get it back. The problem here was these characters weren't really affiliated with a large company. And what one of the first things I learned out of law school is that people like that, there's a big difference between suing someone and collecting, right? And I quickly learned that people like that, they all seem to have a drug problem or some other problem, and the money is just, it's just not there. And and I've seen this kind of thing play over time and time again. And there were a lot of cases where I was able to recover the money because the person was affiliated with a larger company that had, the expression is deep pockets. But that is, I think, really a tremendous cautionary tale. So it's so funny because I'm recording this segment on July 9th, 2025. And I see people, I was watching, I took notice of this primary election or whatever it was in New York City, where they've got some guy, this Mondami character. He's never had a job. He's never held a job. And, he's promising free everything. And apparently, he's a socialist for sure. And I've heard, he's talking about taking the means of production away. So that pretty much means when you do that's the kind of thing that Karl Marx and communists espouse. And yet, one of the voting blocks that put him into power were young college graduates. Now, if you know anything about economics, and believe me, we're going to get into all of this, you understand, and financial literacy for that matter, you understand that all these benefits, these never-ending benefits that were promised for free are not free, as indicated. Milton Friedman, one of the greatest economists of all time, made a clear, and history proves him right. There ain't no free lunch. And if you believe there is, you are not financially literate. Um, and maybe you've never, and with a lot of people like that, like this Mondami, I mean, he uh, apparently didn't need to work. So you get a lot of people like that. They grow up in privileged circumstances. They really don't. They're not in the business world. They've never really worked. They just don't. They not only don't have the formal knowledge and training, but the other thing they lack is common sense and street smarts. And I've seen people that do have common sense, that do have street smarts, and while they may not have had a lot of formal training, they've made a lot of money because they had those attributes. In other words, they weren't gullible, they weren't naive, and they learned. They paid attention to what was going on. So this example that I threw out is it's a cautionary tale for really all people. And one reason I bring it up is this guy was highly educated, and I didn't get into had he written a lot of papers and all of that, but he was highly educated, and it really demonstrates how you while you can be literate in terms of being able to read and write it, and you can get an education to a certain degree, but if you don't have that other part of it, that financial literacy, you are seriously lacking. And when I said the possibility of making or saving $200,000 over a lifetime, well, this is a good example. Had this guy had any financial literacy, real financial literacy, had he been skeptical, had he done his due diligence, had he done his homework, a professor, what a concept. Had he done those things, he would have saved himself $750,000. And what he did instead was, just horrible. For him and his family. Well, okay. So I want to throw that out. And by the way, as we go through these segments, I'm going to try to bring up concepts from prior segments as kind of a means of positive reinforcement, right? I mean, because a lot of these concepts that we introduce in one segment have relevance in future segments, and so I want to keep bringing things up so that it further instills within you your knowledge and understanding of all of these things. And on that note, there's another thing, and that is another real life example. We were talking about in one of the prior segments the difference between financially strong and financially weak. A few years ago, I was in a Lexus dealership. I was buying my wife a car that she liked the model and all that. And the salesman, you know how they have these little pods. Well, we're sitting in one pod, and some woman sitting in another pod, but we could hear her. And the salesman in the other pod tells this woman, "You can't afford to buy a car." And I mean, he was looking at her financial statement, he was looking at her credit report, and she started crying. Now, that is not only a case of someone being financially weak. I mean, because, a car salesman, the thing that they want to do, they want to sell you a car, right? The last thing they want to do is tell you can't buy one. But she was apparently so overextended, and or her credit was so bad that it was just, it couldn't work. But so here, this is someone not only that's financially weak, but financially illiterate. Because if she were financially literate, she would have at least known that she was not able to successfully close a car deal, right? So that's just another example in everyday life. So, all right, on that score, we're going to turn next to the subject of debt, and we talked about the the difference between an individual being financially strong and financially weak, or a household financially strong and financially weak. Well, what about a nation? What about how about our country? Um, and so you can see in the caption here, I've got debt, weak, not strong, Uncle Sam, debtor nation. Now, a debtor is one that owes money. A creditor is one to whom the debt is owed. Okay. So if you lend money to your Uncle Sam or your Uncle Harry, you are a creditor as to that transaction. Uncle Sam or Uncle Harry is a debtor as to that transaction. Okay. Now, some of you know these terms, some of you don't. Um, and by the way, our whole system is based on this creditor debtor relationship. It's a real pillar of it. So it's important for you to understand those terms. So our national debt right now is in the area of a whopping $37 trillion. And if I were to say to you, you as a citizen of the United States owe $108,000, you would say, no, I don't. And I would say, yes, you do. And what is that $108,000? Well, if you do the math between our national debt, it breaks out into $108,000 for every person here in the United States. Okay. And while you're thinking about that ridiculous number, if you're a taxpayer, and by the way, believe this or not, 40% of the people in this country pay no taxes. I mean, we keep hearing about the rich not paying its fair share. Well, we have almost half the country that pay no taxes. So you can ask yourself whether or not that's a fair share or not. But if you are a taxpayer, then you owe $323,000. That's your share of the national debt. How do you like that? Isn't that a great number? Right now, the interest on the national debt is per year $1 trillion. That is equal, plus or minus, to our entire Defense Department budget. To give you an idea, that is crazy large, right? And yet, in these numbers, the next number I'm going to give you is a couple numbers are approximate. But so, in other words, in order to make this, keep this ball rolling, we have to borrow $5.5 billion a day just to keep the budget, the interest payments, and all of that going. And then people say, well, we can have more people on Medicaid. We can have more, under Biden, it was over 10 to 20 million illegal immigrants came in this country. Well, they just want a better life. Well, I know they want a better life, and I certainly don't hold that against them. But the question is, can we afford it? Well, you already owe $108,000. And if you pay taxes, you already owe $238,000. We're getting to the point where we have this crazy debt. And right now, just to maintain what we have, we're supposed to keep borrowing $5.5 billion a day. Oh, and by the way, let's borrow more money, huh? What? I mean, it is like, and as far as immigration and all that, you can do what you want, you can vote how you want, but now you know some of the numbers involved. And this gets back to having an adult conversation. I mean, imagine you've got a relative who has $30,000 in credit card debt, and they want you to sign up and co-sign for them so they can get another credit card. You go, what are you, crazy? I mean, first of all, you have way too much credit card debt. And secondly, you'll probably never be able to pay me back. So the answer is no. I mean, and that is an adult conversation. And of course, the relative could say, you're mean. That's what you would expect to hear out of a child. I mean, it's like, well, Daddy, I mean, can we go to Disneyland? Your choice as a father is to put money away for a future college education, and maybe put money in a medical savings account and things like that for an emergency, or save money for an emergency. So you're forced to say, no, not at this time. We can't go to Disneyland. And then and have your child say, you're mean. Well, you're not mean. You're just not foolish. You're not foolish. And that's part of having that adult conversation. We can't be, what we want to be is wise. What we don't want to be is foolish. We don't want to be that woman sitting in that car dealership trying to buy a car that we clearly can't afford, and that the car dealership won't sell us, and no bank or credit company will lend the money to. That's not who we want to be. And so, and as far as our government is concerned, right now, there is a heightened awareness that we've absolutely got to do something about this crazy debt, and we've got to get this stuff under control. Because if we don't, sooner or later, this country is going to go into bankruptcy, and that's not going to do any of us any good. We want to do the opposite. We want to be individually financially strong. We want our cities to be financially strong. And I'll have more to say about that in the future, our city, specifically Denver. But we want our country to be financially strong. It's in all of our mutual benefit to do that. And deep down inside, it's pretty much what all of us want. So glad you're here. That's going to do it for this segment, and look forward to seeing you next time. This is Bob Hutchinson. Welcome to $1.00CENTSShow.com. If you struggle with financial matters, you are not alone. If you have difficulty understanding financial matters, you are not alone. If you don't know who the players are, who the teams are, or for that matter, where the stadium is, you are not alone, because probably 90+% of the people in this country are financially illiterate. But before we begin, just a reminder, we are not acting as financial advisors or investment advisors, and we're not giving financial advice, investment advice, legal advice, or for that matter, any professional advice. So there are no guarantees, no express or implied warranties regarding the accuracy of any of the information provided here. The purpose of this podcast is to give you an understanding of the financial tools that you will need in order to make good financial decisions. So we're very glad you're here. We're going to have fun. We're going to look forward to having you join us. So we will be talking to you soon. Thanks.